Good morning, everyone. Hey, James. Long time no see. Badir, how are you? Raj, welcome to the folks joining us on YouTube. Good to have you with us. Well, well, we definitely have change. First we had macro change with tariffs and AI, and just when the analysts thought that they could quietly do their models, now we have a war. So, hey, Dano, what's up? What's up, Chiraj? So tonight, of course, you'll have. Let's talk a little bit about the environment. Of course, it's an environment really that doesn't support a lot of retail. First of all, a lot of places have raised margin requirements, right? So if you're trading, what are they charging for the micro? Um, for the micro, it's like $2,700 to trade, and it's like 25 grand to trade for the mini, right? So I predicted that they were going to raise margin, which makes sense. It's way more than the 25%. They're at 100% maintenance margin. So it's 26,586 for a mini and 26,659 for a micro. Um, and a lot of people are like, "Oh, that seems excessive." Well, if it was your money that you were loaning to retail traders, you wouldn't think it's excessive at all, considering retail traders really have no concept of risk management. Uh, I'd probably make it 200%. So trading is going to be difficult on days like this because margin rates are really, even my clients that I'm trading a fairly sizable account, um, I'm just going to wait and see what happens here. I was looking for these zones, and I said we have a 70-30 to 67-88 area, and it's definitely what you want to be looking for if you are a larger trader who is trading or you don't have any restrictions. Yeah, I mean, it's volatile and it's supposed to be volatile, right? I mean, it's a war. So, when you have war conditions and people are lobbing missiles at each other, uh, you know, it's that is a risk-off environment. We just did a look below and fail of 67.88. We went down to 67.83 and came back up above it. I don't know if we'll stay above it. I did a very in-depth video yesterday and posted it, um, and I was showing you where the swing lows are. Um, we're under 68.07 now. This is a big swing low for us at 67.49, and then there's some other swing lows down here. All of this inventory is above us, and if we start taking out 67.49, which could happen, right? We will get a resetting of this cost basis. It'll come down into this area. Now, I'm using the cost basis from Friday because what I'm doing is our cost basis was up here and then I doubled it to the downside and doubled it again. We're at 8 times cost basis now. just at that 67.86 area. If you want, right, we are going sideways here. So somebody messaged me and said, JJ, I can't find a cost basis. Well, no, you can't because it's trend down, right? So when the market, you could have used this cost basis, a little bit of distribution, and then back up, back down, and there's a little bit of a cost basis here and here. So if you were redrawing your balance zones, you could draw a balance zone here, right? And then double it, right? So let's go and do that now, right? You can see that overnight inventory is, oh, it's probably about 90% short most of the trading. Well, sorry, not 90%. It's 100% short because all the trading's underneath the previous day's close. Excuse me. And we'll just see where they find the bid, right? I mean, that's all we can do, you know. In these kind of times, I've traded through a lot of world events, um, and usually I was just doing my own deals, so I didn't have to worry about margins and things like that. Um, my advice to you guys is, and I don't know if you can follow it, but my advice is to sit back and watch. Um, and this is where, you know, if you're trading funded accounts, this is really where it's great for people who aren't trading their own money because they get to trade this kind of volatility. Most of these funded account places don't have any restrictions, right? From what I understand, they're like, if you're doing your evaluation, go ahead and trade. Um, and if you blow up the account, we will, just take another $100 off you or whatever it costs to reset it. Um, that's definitely, I would say that's an option for retail traders. Go get yourself a funded account, like a Apex or a Take Profit. Those are the kind of firms that most of our folks use. And, start going in there and hacking away in the weeds. That's what I would do. I'm off tomorrow after the morning session, so I won't be around tomorrow afternoon. I'll be back on Friday. Um, so yeah, just you know, here's your balance zone for the morning. If you so desire, I would use this. You can see there's a chunk of volume there, right? So this is basically the new cost basis for the evening, right? This is how you find cost basis. What I like to do is I go and I look for highs and lows, right? And when you that low, that high, when you look below that low, you go right back to that high, and it's that back and forth that you're looking for while they build a cost basis. It's a big one because it's a big range. So, uh, I love going away when there's big moves, um, because I don't trade big moves, right? A lot of people are like, oh yeah, I traded the whole 100 points and then I got in my Ferrari and I went to my 50,000 square foot house and hung out with my supermodel wife and, my pet dolphin. And I know that's not realistic, First of all, if you're trading your own money, um, are you really trading 100 contracts at $26,000 margin per contract? Probably not, right? So there's a lot of people. This is when Twitter people are like, "Oh yeah, I caught the whole move down," and you know, then you took off your VR glasses, right? I'm perfectly happy to let other people chase drama. I love a nice balance zone where I can manage my risk, you know. I like, a lot of people are like, there's a story I always tell. We were in a nightclub with a buddy of mine and his girlfriend, and a huge fight broke up on the dance floor, and his girlfriend, who had absolutely zero situational awareness, was like, "Let's go dance." And I just grabbed all of them and I pushed them out of the club while the police were coming. I was like, these people had no idea what's going on around them, right? And that's how you get hurt, when you're blissfully ignorant of what's going on around you. So I like a nice, quiet, normal day, normal business, make a little money, put it away. I don't like drama. And yeah, so we'll just watch this ballot zone here. Not really much to do, folks. I don't even have my trading software open. In times like this, it's really, really easy for people to. Um, your ego will definitely outpace your skill, and your bank account. So you got to really be careful about that. You really don't want to, you know, have your ego be bigger than your level of skill. Something you should really be careful about. Um, trying to catch huge moves. Um, I'm perfectly happy to let, you guys go first and you show me where the bids are, right? And we'll see how long these higher margin rates last for. You know, unlike um, unlike things, let's see, we just got an email from AMP. Oh, so now they've got it back to $80 for a micro, and what do they got here? $800 for a mini. Okay, so it's tradable now, right? See? Raj, did you see that? What time did that email come out? Oh, 7 hours ago, right? So for the open, they jacked up margin rates, right? And now, yeah, and nobody told me as I was sitting here talking. Which means you guys are just as asleep as everybody else. All right. So, yeah, go ahead and trade, right? It's $80 a contract. That's not bad, right? Could be worse, right? I didn't even check my email this morning. I just thought, you know, so there you go. Let's crap open the trading software and run some trades, right? Daddy just gave us back the credit card. Let's go shopping. So we have our ballot zone. It's 87 to 99, right? It's a fairly large one, right? And what you want to do is you just want to trade from the outside in. So very simple. Double it to the upside, double it to the downside. There you go. We could go set the VWAP, set it at market open here. Just get rid of this volume profile. All right. There you go, folks. You're all ready to go now. So that's what we do. We go and we set a balance zone, right? And a balance zone is just establishing a cost basis, right? So what is a cost basis? Do you guys know what a cost basis is, right? If you have inventory, right? Yeah, and we only have one set of single prints here. A little bit of supply above, right? So off we go. What's the order book look like? Ooh, it's fairly thin, right? So Order book's fairly thin, which means there's not a lot of size on both sides of the ladder, right? The price ladder. You have tens and twelves, a couple of twenties, and so if somebody comes in and puts a big order in, it's going to move the order book quite substantially, right? Price will move, right? So my that level 67.88 and three quarters. Let's see if we hold that. It's a big level for me. Hey, what's going on, Marcus? How are you doing? The trades I love, I like to look below and fail. So I'll see if we can come down to 87, look below it. We do the same thing every morning. Hey, Ed, what's going on? How you doing? I'm good, brother. Man, you're a traveling man, aren't you, Ed? Always traveling. You're always in a different place. I like that. That's good. That's good. Oh my goodness. So we seem to be having some bids, in this. See how the market just stops cold here, eh? Interesting. So what happens when a market can't offer underneath a level, right? If you're a faster trader, right, and you watch and you see, look, it's bid, it's bid, it's bid, you can go and build a little, if you're convinced that this is, they're going to be, they're buyers underneath this level, which is 69.93, right? And then they flip to the offer from 93 up to 99, right? You can go and buy yourself a little position. Like say I'm buying 69.90, right? I buy a few at 90 and a quarter, put some bids at 90, right? Now, if it blows 88 and three quarter, I know, uh-oh, right? Right? I know I've got to start reducing my risk with size, right? And if it blows 87 and it takes out the bottom of these candles, then my inventory is not really priced well, is it, folks? Right? Do you understand that concept? Right? Hey, Ed, you're in the room. That's cool, right? Do you guys understand that if you have, staying away from your wife, if you have inventory priced at, say, 89.90, where you're buying it, right? And the market takes out 87, then you know the inventory that you own is not priced properly, right? And you know there are sellers up here, right? So this is how you look at a market with without having rose-colored glasses, right? So you know that there's a seller here, there's a seller at the top of these candles because that's where the sellers initiate. So now you're thinking, okay, well, is this the best position to have, right? So I'm long like 89 and three quarters on a couple of contracts, and I'll go put an offer out if I was, right? What I'd do is I'd go and put an offer out at 90 and a quarter, right? And if I can't get a print at 90 and a quarter, then I know, oh, this could be a sale, and I might have to wait until it does a look below and fail of 87, right? Now let's see. Now London's going to open in 8 minutes. Look at the bottom of those candles. You can see bid, 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 right? Like they take and bid, and then the seller comes in right there at 89, right? So there's this sort of, because we've got people who are trapped above us long. So in a situation like this, if you're looking for a long trade, right, you must wait until it looks below a level, comes back up, and you see that offer lift. See, because the offer's been moving lower, right? So that's what helps you manage your expectations. So if I'm going long and I see the top of the candles, right, you're getting that trend down. That's not really great for a long. You want it to look below and fail and then come up and take out the tops, right? So you've got to really manage your positions well here, folks, right? Right? And make sure you sell into strength. So if I bought those 89 half, 89 quarters, right, I'd have sell orders all the way up because why would you why would you not? Right? If you're long at 88 and a half and everybody's selling at 90 and a quarter, why wouldn't you sell with them? I know it's not a lot of money, but why would you just hold on to the trade? Do you guys kind of understand what I'm getting at? Do you understand the tactical significance of this kind of trading? And it's not a system or a JJ method or anything. It's just common sense in business. Right? At some point in a business situation, you are going to have to exercise some common sense. Right? You will have to think like a business person. Like you're not going to have to think like a dreamer. Right? It's essential. Hey, trade maker, what's going on? Right? Very important. Right? See, and now we're underneath 87. Let's see if we can catch a bid somewhere, right? Because if we can't, then there's no point even thinking about going long. Why does there have to be trap traders? Well, George, have you ever bought something? Have you ever bought product at a price and had it go underneath you and you held on a little too long? You got to also understand, George, I'm not sure how much you're trading with, but a lot of these people are trading with hundreds of millions of dollars. And they have an investment outlook and they will they have capital to put to that investment outlook, right? And not everybody sells at the same time, right? So you and Ed and Raj and Muhammad, you guys all sell at different times, right? Well, they could have been long over the weekend, right? You kind of understand, like you have, like I'm not sure how old you are, but um, people get trapped. That's just how business is. Have you ever run a business, like been in a business, and you've bought something that you wanted to sell at a certain price, and then the market changes? You know what I mean? It's sometimes you just got to be a little bit practical, George, right? That's all it is, right? You know, what if you're swing long? What if you were managing $400 million, right? See, we are a very small amount of this market, right? Here's the thing, folks, right? Wall Street doesn't really want you to day trade. They'll take your money because they know you're going to lose it, right? Well, it's assumption you can't validate because you've never worked in the business and you don't understand how the business works, right? Just because you don't understand it doesn't mean it's not happening. Like I don't understand plasma physics, but other people do. Do you kind of understand what I'm saying? Just because you don't understand something doesn't mean that it's not valid. Do you get what I'm saying? And this is a problem with retail traders because where does your base of knowledge come from, George? My base of knowledge comes from the fact that I've sold billions of shares of stock to people and trapped them long. You get what I'm saying? What I would worry about you, if you're trying to trade, George, I would really focus on building a trade setup that's based around reality, right? If you want to do thought experiments, right, that's another story. And if you're writing a white paper or going into theory, that's definitely something. Yeah, we got a poor low. Don't know if it'll hold, right? But just because you can't validate something in your head just means you don't have the information and you don't have the knowledge. So I would kind of leave that alone right now and focus more on the business. Do you know what I mean? It'll help you from going down rabbit holes and getting confused. Because a lot of traders will do that. They'll go down, oh, well, this is happening or that's happening, but they're not making any money. You know what I mean? Yeah. So we're underneath 67.88 now. Let's see what happens. London's going to open in a couple of minutes, right? I would watch the rabbit holes, folks. You know, it's very easy to go into these circular conversations, right? Yeah, you know, it's there you go, Corey, right? It's been a while, right? Where's the bid, brother? Right? Where is the bid? Right? That's really all you got to care about, right? In trading, right? Now, world events are what they are, and of course, you know, that's upsetting and stuff, but hey, you're a trader, right? Oh, it's measurable, George. It's really measurable. You just don't know what you're looking at, right? At some point, George, you're going to have to understand, you're going to have to make peace with the fact that you don't know what's going on, and then open your brain up and try and learn, right? You get what I'm saying, right? There will be times in this business where you have to admit that you don't know what's going on and open your brain up to learning. And if you do that, I promise you, you'll find it quite satisfying. It's very measurable. The thing is, you don't know what to measure. Look at all this time that we spent between 87 and 99. People are long here. They're trapped, right? If you're long at 94 and it's trading at 84, you're trapped long. If you have a large account and you didn't sell, right? You're long. You're trapped, right? Poor low is fixed. Took a whole 10 seconds, right? Boom, right? London's going to find the bid for us, right? Don't get in the way, right? Just stay out of the way, right? As the market drops in, right? Do not go long until you get back up over 88, 89, 90, right? Just let the large traders work this area out. Does that make sense? Nicely done, Dano. Right? It's okay to admit that you don't know what's going on. It's very, very freeing mentally, right? It's measurable. Go draw a volume profile. Watch, George. Right? Yeah, it's good. Watch this. There's your measurement, my friend, right there. Do you see all that volume? Do you think those are all short sellers? Those are people who are going long, covering. Some people are covering their short. People are building long positions there, looking for a move up. And if they didn't sell at 67.99, right, and you're long at 67.92, you're long. There you go. See how simple it is? Just free your mind, brother. Right. There's your measurement right there. You know, and how would I know? You're a living example of a trapped long, right? Think of all those people who are long MSTR at $300 a share, right? In their IRAs and stuff like that. They're trapped. They're trapped. They're trapped. It's brutal, right? See, we got sellers here now, right? Just track the sellers, right? And see if we build out a little position here. See, people are stubborn. I've seen. You ever heard of Brian Hunter? You guys ever heard of a guy called by the name of Brian Hunter who tried to corner the natural gas market? No? Amaranth Advisors? He blew up $9 billion, right? Right? So if you're long, right, on this look below and fail, right? Put some sell orders out, my friends. Put them out. Put them out. Sell into strength, right? You're long 86, 87. Get flat. Well, he tried to corner the natural gas market, you know, and he blew up $6.6 billion and of other people's money. And his fund took a $6.6 billion loss and had to be dissolved. He's not in prison. He's got a fund. He's got another new fund. Right? All these guys, right? Bill Wong, Brian Hunter, Nick Leeson. There's always some guy who thinks he's smarter than everybody, right? And if he talks a big enough game, people will throw money at them, right? Happens all the time, folks. What did Billy Wong? He blew $30 billion in a week. You know, these guys play fast and loose with other people's money. Now, Bill Wong's going to jail, but because he tried to hide the losses and he lied about it. You know, so you'll always find people who are wrong. You'll always find people who are doing crazy stuff, trying to corner the market. I mean, the Hunt brothers tried to corner the silver market in the 70s. They were buying physical silver bars, putting it on planes and flying the silver to Swiss banks. All sorts of crazy stuff. What I'd like to see is this point of control, which is up here in the 6820s. I'd like to see that move down into this area. I'll put a little size on the barbecue here, right? See, yeah, he's probably looking for a pardon, right, Raj? So we know where the sellers are, right? We know that there's sellers all the way through here. So just manage your expectations, trade a little less. Don't be too jumpy. Relax, right? In times like this, the best thing to do is just relax. The blue line is 67.88 and three quarters. Oh, you're off for 2 weeks? You going somewhere fun, Moran? See, sellers are right there, right? And it's a little choppy, right? Because what happens is you get a little bit of a news headline, and when that news hits, right? Oh, nice. Very cool. Enjoy, Moran. Enjoy. You deserve it. Have a wonderful holiday. Right? You see this chop right here, folks? This is where you want to let the large traders work this out, right? That's just don't get involved in that, right? Let the large traders work this out. When it gets back up over 67.90, it will have cleared out all these sellers, and you can take the trade up to maybe 94.95, right? Don't, don't participate in this, right? They're working out the new overnight low, right? That's what's going on. And when large traders are working out an overnight low, it's like large trucks are moving back and forth. You don't want to be standing behind them because you're going to get run over or standing in front of them. You know what I mean? So just relax, chill out, take it easy. Trading will be it'll be challenging this week, right? I told you guys at the beginning of this year that we're going to have to reset our cost basis. I didn't tell you how it was going to happen, but I did say that we are going to have to reset cost basis, right? Right? And now we are underneath 6807, right? I'm looking for 6749, where that swing low is, and the sell programs will kick in if you taught your landlord how to day trade. Now you're both renting. There you go. Yeah. Yeah, there will be times where it's tradable, and then there'll be times where you just don't want to get involved, right? And when they're working out a low, don't get involved in that. Just leave it alone, right? Poor landlord. How to make $1 million day trading? Start with two. Right? You got to learn what to do. It's hard. Everybody's like, "Oh, I want to quit my job and trade." I'm like, don't do that. See, the market's just looking for the bid. Let it do it. You know. Now, do you see all the inventory above us? All the inventory above 67.80 is trapped. You see that? You guys see that? This is all trapped longs, right? And each one of them will sell at different times because somebody up here might have a $2 million account. Somebody up here might have a $2,000 account. So the $2,000 account guy will be out. What about the guy with 2 million who's putting maybe 100 grand behind the trade, right? He'll stay longer, right? Yeah, they're always great. Though hindsight trades are always great, eh? Hindsight trading is always great. All we need now is to somebody build a time machine, right? Just build us a time machine, right? Some people will trade maybe. People will average down. They'll do all sorts of crazy stuff, right? Especially people, you got to understand, trade maker, when a lot of these small partnerships and fund managers, right? When they have other people's money, right? They're not they don't think like you and me, right? So if you have like say you have a small fund like $300 million and you're leveraged, right? You got a prime broker. You don't think like a retail trader, right? So you could have a core position and that core position could be down a couple of hundred grand. But if you're down a couple of hundred grand and you got 400 million under management, do you understand they can afford larger business expenses than we can, right? So that's why you don't want to trade like a fund manager or these big prop traders because you don't have the skill or the capital or the credit or the technology, right? Like you can't do like if you opened a little store that sold TVs and I was gonna say VCRs, right? If you had a little store that sold TVs and laptops and stuff like that, you can't compete with Walmart, right? Because their pricing is gonna kill you, right? So we found some bids here. There's going to be some sellers in the 82, 83s, right? Good excess on that profile down to 72, right? Now a little bit of short coverings coming in. See? Yeah, and the other thing too, trade makers, they'll be long in one account, short in another. So they could have a short position and trade long against it. They could have a long position, trade short against it, right? Because when you have a prime brokerage account and you're trading hundreds of millions of dollars, it's a different you're doing business at a different level, than a retail trader with 5 grand in their account, right? Hope that makes sense, right? Hmm. Not much to do here, ladies and gentlemen. It's a little jumpy, right? Times like this, just wait for when you trade. You know, if we come and do a look below and fail of 67.62, that would work. But when it's just chopping around like this and it's trying to work out that overnight low, just let it. You know, just let it. Right. Keep your eyes peeled for emails from your brokerage firm. I don't trust that overnight low. Let's see if it holds. Oh yeah, these concepts definitely hold for NQ. I don't trade it. I have no reason to trade NQ. It's a very thin market, you know. I don't like thin markets. You guys know what a thin market is? A thin market where they don't have a lot of orders on either side of the book to cushion moves. Okay. That's that's probably why you probably get destroyed trading NQ because you don't know what a thin market is. Like ES right now has maybe 10 or 12 contracts at every tick, right? In times of volatility, there's not a lot of people who want to absorb risk. So Sandfax, do you understand what risk is? Right? And you understand in times of volatility, you don't want to be like pushing risk, right? Do you understand that concept? Like if you were walking and there was like a lake and the lake was full of alligators, would you go in for a swim? Right? Well, there. So now you understand the concept of risk, right? So another thing I said yesterday, I was on a call with someone and I said, listen, when markets are like this, it's like I want you to picture a safe, right? And the safe is full of gold, right? And it's a very heavy metal safe. It maybe weighs 5,000 pounds. It's like heavy, thick metal. And they throw the safe off the top of the Empire State Building. Do you want to be on the ground when the safe hits? Do you want to be underneath it? Or would you want to step aside, let the safe hit the ground, break open, and then go and pick up the gold? Do you guys understand? Can you visualize what I'm talking about? Right? So that's what you should do in trading, right? Let them throw the market down, let it break open, and then go and pick up the gold instead of trying to catch the safe and getting crushed, right? Or trying to like break the safe open at the top. Wait till they throw it off, right? Be a little smart, you guys, right? Start using that thing that sits on top of your shoulders, right? Use the old noodle, right? A lot of trading is common sense and just rubbing a couple of brain cells together, right? And think about business, right? If you guys do that, you'll have a much better chance of not losing all your money, right? Yeah, exactly. You don't go into the lake full of alligators, right? Don't try and catch a falling safe. Let it hit, let some other idiot get nailed with it, right? And then when it breaks open, just go and pick up the gold and go on your way, right? Do a little business every day, make some money and try and keep it, right? It's really that simple. Build a trading concept, build a trading business plan around smart, practical, common sense business. And that's what we do, right? Right? That's what we do in our trading room at the trading syndicate, right? This is what we this is what we stress. We want you to make money. We don't want you to be miserable, right? I say right all the time because you know what it is? KK, because when I talk, people don't listen. So I go, right, right? Are you listening? Are you listening? Are you listening? Or are you watching TikTok videos? Right. I don't have to say right when I'm working with institutional traders. I say something once and they get it. When I'm talking to retail, I got to repeat things 400,000 times. Right? There you go. Right. Hey, Frazero, I'm good. I'm good. Just chill it out. Now I'm off tomorrow. I'm going to do a London session, but I won't be around for RTH. How do you manage stops? Only take trades where the edge is, Mohammed. So right now, right, I'm not touching nothing. Right now, I have no desire to take a trade. I would take a trade if we did a look below and fail of 67, 62. Okay? So what I would do is I would wait for the market to come under 67, 62, come back up, go long, say 63, 64, put your stop here, right? And then sell it to strength, right? Do you size lighter? Of course. You size lighter in volatility because it's just, once again, Fazro, everything is common sense. You guys get that? Everything is common sense. Do you guys understand that it's everything that you do has to have a grounding in common sense? Yeah. You know, the problem is these trading mentors and these trading gurus, they have no concept of risk management. They have no concept of capital conservation, right? They have no concept of the business. So they're like, "Oh yeah, just take this trade off of this indicator." And then you get all these people who are saying, "Oh yeah, don't use stops." All sorts of stupid things batting around the Twitter sphere, right? Just all sorts of just idiotic, stupid business that if you worked at a business, you would never, like if you owned a restaurant or if you owned any place where the public came in, would you not pay insurance? Like if you had McDonald's, right? Would you not pay the insurance? So some idiot slipped and fell in your bathroom, they could sue you and take away your business because you have no insurance. Think about it. That's what your stop is. So say you're going long here at 72, your stop should be here. So if you're long, your stop, pick a level, put your long, put your stop, and make sure you sell into strength. Make sure you sell into strength. You all saw the bid here. There it is. There's a bunch of unfilled buy orders here that created support. The market came down, saw those buy orders, and lifted price. Very simple. But it takes observation and it takes concentration to figure that out. And that's the trade you want to do at an edge. Once you get better at it, you'll be able to buy 72, 73, put your stop here, sell the 76, 77s, make 3 or 4 points, and then be done. So number one, only trade when there is a visible edge. If you don't know what a visible edge is, come into our trading room, we'll teach you. Right? Then if there is a visible edge, make sure that your stop is underneath that visible edge. Because if the trade no longer makes business sense, there is no reason for you to be in it. Does that make sense? So I'm buying inventory at 72. If somebody offers it for sale at 70, that means my inventory is not priced correctly to sell at a profit. Do you guys understand what I'm talking about? Common sense, ladies and gentlemen. Use some common sense when you're crafting your trade business plan. Because all your trades need to have a business reason for taking the trade. And your risk is dependent on when that trade does not make business sense. Right? So you're not screwing around with RR and 2 times risk. No, if I'm long at 73 and somebody's putting it for sale at 71, why the hell am I holding this inventory at 73? It's got to be simple. And that's all there is, ladies and gentlemen. Thank you so much for being with us this morning. Trade safe out there. Take only those A-plus setups. A-plus setups are setups that you have taken hundreds of times. You know them inside and out. You know how to trade them at different times, different volatility. The market is still looking for the bid. Let's see if 62.5 holds. Be smart out there, folks. Thank you so much. We will see you at 9 a.m. Eastern Time. Come visit us at the Trading Syndicate. Learn how to make money and keep it for regular people. Thanks, everyone.